Hello, everyone, and welcome to today's webinar. It is April 20th. My name is Alyssa Atkins, and I'm going to be your webinar facilitator today, and I am the Training and Development Coordinator for the Native Learning Center. Just a quick disclaimer before we get started. This webinar provides a summary of fundamental concepts and requirements and/or procedures within the allotted 90 minutes. The material discussed does not illustrate all possible scenarios that could be applicable. Before we get started, I wanted to familiarize you with some of the features available and how the environment works. If you look at the top of your screen, you will see an icon of either a person with their hand raised or just a hand. With that icon, you can either raise hand, agree, disagree, or step away. Now your screen should look similar to the graphic here. To the bottom left, you will see a box that says Files. Here you will find today's presentation. Please feel free to download a copy for yourself. Simply click the item you would like to download, then click the arrow pointing downwards, and you will be prompted to save or print the materials based on your device's permissions. The second box that states web links to houses today's survey, as well as any other links that are found throughout the presentation. Lastly, to the right of the screen, we have a chat box available. This is how you will communicate to an instructor and NLC staff. If you have any questions during the presentation, please feel free to interact by using the chat box. Simply type your message and hit enter to click that up arrow icon button to submit. We encourage class participation, so please feel free to write in those questions or comments. Tech support issues should also be submitted here. Okay, and with that, I would like to announce Mark Thompson is going to go ahead and give today's webinar.
All righty. Thank you very much, Awista. Hello, welcome everybody. Awista, if you could just give me the share button, there we go. And let me just get my screen going here, and we'll be ready to roll. So, hope everybody's in the right location, developing your operational budget. Have to apologize. You can tell my voice is a little nasally, or I've had a cold for over a week. And last week was just beginning when I did my last presentation for the Native Learning Center, and it's still going on. I thought I'd have kicked it by now, but I haven't. So we'll do our best. So I apologize if I sound a little off. That's what's going on, but we're still ready to roll. So today we're going to talk about developing a budget. We talked about in the description here of this webinar an operational budget. So we've thought more about business, and that's what we use in our normal trainings when we're talking about budgeting, and then also cash flow projections and business planning. We have a tool we're going to use, but I think this is also important information that we can use within our family as well. A lot of the exact same concepts, and I'm going to try to touch on both as we go through. So even if you're here and you're saying, oh, well, I don't have a business, I'm not interested in business, this could be good for you guys as well, because I think we're gonna try to cover both concepts. So hello, everybody. Hello, Janine, down there in Vegas. Hope everything's great. Great town down there. So hope everything is going well with you guys. So a little bit about who we are. So I'm the Executive Director of Indian Dispute Resolution Services. And so we have a program where we do dispute resolution, tribal council elections, all kinds of work on that side. And that's our website. You'll see it. It's really forward facing for our tribal clients. Then we also do small business development. That's one of our more recent programs. We started the IDRS Acorn project, and we do small business training, technical assistance, and you'll find all the information about our organization at nativebiz.org. Who I am, like I mentioned, I'm Mark Thompson. I'm the executive director. I've been here just shy of 20 years. We're located in Plymouth, which is just outside of Sacramento. There's our phone number, my email, if you guys want to contact me. I'll make sure that it gets here into the chat box. I'll just type it in right now. So if you guys want to reach out to me, feel free. And even after my last workshop, if you guys did not participate in that, was called Credit 101. Had some great questions from some of the participants. They were asking me some questions about what was going on with their client in certain different situations. More than willing to help out the best I can. So feel free to contact me if you would like any assistance or just to say hello. So what are we going to do in this class? We're going to talk about what a budget is, talk about why we might want to do it, all that kind of, kind of the basics of budgeting. We're also going to look at, how do we get the information that we need for our budget? And so we're going to talk about different ways. I'm going to mention both. There's a lot of different resources out there for a business, especially if you haven't been running a business before. It makes it a little difficult. So we'll talk about where you can kind of get some of that information. But we'll talk about, some of the budgeting tools that we can use for a personal budget as well, for our family budget. We're going to actually demonstrate and have some tools for you guys that you can download and utilize. And it's the cash flow projection sheet that we've been using for many years here at IDRS. Still think it's a great tool to help you guys with budgeting. And then we'll do some Q&A. So one thing OWISTA has done for everybody, you guys can come off mute. So if you guys have questions, feel free. Just unmute yourself and interrupt me. I have no problem at all answering. Of course, you can always post your question in the chat box if you would prefer that. You can wait till the end and ask whatever you want to do. I'm here to serve and just want to make sure that you guys are getting your questions and information answered. Okay, so let's just roll on real quick, go through some of this introductory information. I just kind of, I was being kind of a little, I don't know what the word would be, but I went to Merriam-Webster and got a dictionary definition of what a budget is, right? And the dictionary definition is a plan for the coordination of resources and expenditures. But really what we're doing here with a budget, right, is we're taking the amount of money that we think is going to be coming in, whether that's going to be into our business or into our family, right? Into our business through sales, either physical goods or, if we're providing a service, that revenue. And we're saying, what are we going to do with that revenue? We're going to have some expenses, how much profit, and we're going to be balancing that. And our family, we're doing the exact same thing, right? We're looking at what's coming in from our job. There may be a side hustle you have going on. And then we're going to say, okay, now we have all these expenses that we have in our family. How do we divvy those up? And then if we have some leftover, our family profit, so what are we going to do with that? And hopefully that we're putting some of that to savings, right? So you can see budgeting works in both the family case and also in the business case. So what can you do with your budget? I think a lot of us know that budgeting is important. It's a good thing to do, but why are some of the reasons why you might make a budget, right? Well, one of the reasons you might make a budget is it's going to allow you to make sound financial decisions. It's going to allow you to plan, right? And that's really what we're doing. We're making sure we're not running out of money, but then we're also making sure that we have when we have the money coming in, well, what are we going to do with it? And we know we're going to have some expenses in the future. Can we meet those expenses? And if we can't, if we're seeing something in our budget that says, oh man, I'm going to be running short, it allows us to make those decisions and hopefully make those decisions a lot earlier when it's much easier to correct and say, hey, I need to bring in more income or I need to cut other expenses, right? And it allows you to really hopefully plan in planning's always stressful, right? You never feel that there's enough, but hopefully it's a lot less stressful, right? Because when you get into a situation where, I budgeted wrong or I didn't budget at all, I'm out of money, what do I do now? And sometimes there's just no easy things to do in those situations, right? Um, for those that are kind of risk averse, a budget can definitely help, right? Because it helps you plan. It kind of makes you feel a little comfortable. I'm very risk averse. So, when I'm making a budget and I'm thinking, and even if I'm not making a formal budget, right? At least if I'm thinking about these concepts going over in my head, okay, what am I, what am I bringing in? What's going out? Am I at least meeting these fixed bills that I have every month, maybe the loan payment, right? And the utilities and things like that. Um, of course, I would always encourage you guys to do it on paper because it just makes it a little bit easier, to do the math. It allows you to actually see those figures. And then if you got to make changes, right? It's hard to do all that stuff in the head. Having it down on paper allows you to kind of write it out, make those calculations, and have a better visual of everything. So, you know, uh, other reasons, right? You're going to have money coming in, you're going to have money going out. Like I just said, putting it all down on that sheet of paper is going to allow you to see all those different expenditures and income sources, and allows you to kind of say, okay, hey, you know what? I have a lot going over to this category. Maybe that's too much, and I can move it over. And then if you are going to be going for a loan, right? So some of us are business owners in here, and we want to actually be seeking funding to help grow our business. Last week we talked about increasing your credit, right? So having a great credit score is definitely going to help with going for a loan, but also having a budget and having good projections of what you're going to spend money on in the future. That's what the lender is going to want to see. They're going to want to see, hey, are you able to pay back this loan? Not just do you have the money built into the system now, but even projecting out, okay, once I give you this loan, how is that going to change? Are you going to increase revenues? And so now you're going to create, more, kind of more of a gap there, more margin. And so it's going to make it easier for you to pay back that loan, right? You're going to want to be showing that. And that's really what you're able to do here with these tools that we're going to introduce today. Okay, so as we're developing the budget, what are some of the questions that we might want to ask? Okay, so what is the goal of your budget? And there's a lot of different types of budgeting out there. I think we're talking about here kind of the whole organizational or the whole family budget. But there's a number of different ways you can budget. Like, you can budget for um, parts of an organization. If you're a big company, right? Every single different division is going to have its own budget. You may have different budgets based on a project, or you may have a certain activity. So you could have really kind of subsets of budgets that inform the whole larger budget. But here in the nonprofit world, we're often encouraged to, we have a budget. Like when we go for a grant, that grant has a budget, right? And then that grant may be part of a larger project. That project has a budget, right? And then that project is part of the overall organization, right? It's just one of many projects. And so the organization has a budget. So you can see, especially as you get into larger organizations, larger businesses, there may be lots of different times that you're preparing multiple different budgets depending on what are the needs of the organization are. There's also different ways that you can budget. Zero-based budgeting, where you're starting from zero, and we'll talk a little bit about how we actually begin the budgeting. But know that there's a number of different ways that you can do your budgeting. So knowing about like what are your goals, right? And also, not just what the budget is for, but is there a reason why you are engaging in the budget, right? Are you engaging in the budget because you want to save money, to buy something large? Maybe you're buying a house, maybe you're buying a car, right? And so, all right, we're going to have these savings goals, right? So we need to build those into our budget. Those are all important. Same thing with business goals, right? We're just it's all these things that we may need to build into our budget. We want to make sure that those are represented. Sorry, I could just feel my nose plugging up, so I apologize if I sound a little weird. Um, And then also, how will these goals affect my budget, right? If you need to start saving a lot more money, um, we're going to have to maybe be cutting something, right? So we're asking all these different questions because these things are going to inform, our budget. Last is, and I mentioned in my business, but this could be in your family as well. Where is that information, right? If you've never created a budget before, where are you getting this information? Now, if you have a business, hopefully that you have you're doing some accounting, right? We've taught in the past about software packages like QuickBooks. There's a free package called Wave Accounting. And if you have something like that you've already been doing, that's a great place to start with your budgeting, right? Because you can go get that historic data and be able to inform your new budget you're going to create. But if you don't have that information, where are you going to have to go track down all this information, right? If you're doing a personal family budget, okay, and now you kind of know what you're bringing in, but maybe it might be good to go get some of those pay stubs to know exactly, right? If you're spending money in the family, okay, maybe it would be good to go get your bank statement. Maybe good to get your credit card statement. All those things would be a good thing to go, pull together prior to beginning and creating prior to beginning to create your budget. So so we've been talking about how do we come up with the numbers, right? And so we just mentioned, going and looking at the historic data that's maybe in an accounting system. That's a great way to go and start with a budget. You may think as an individual that you don't have that information, but you may have some of that information already, especially if you've been putting that information together for your tax returns, right? Just earlier this week was the tax deadline, April 18th this year, because April 15th fell on a weekend. Um, so the so going back even to your taxes to get some information is great, right? So historical data is the easiest place to begin to start your budget, all right? You may not all have historical data, so we're going to talk about some of the different other areas that you can come and get that information. But first, as we begin the process of putting this budget together, realize that your budget's not going to be precise, right? You are predicting something into the future, right? You're not a fortune teller, right? But what you're doing is you're trying to make your best guess, right? And that's all we're doing here. So don't, when you go back and you look at an old budget that you may have prepared, don't get, oh man, I can't believe I'm off. You did your best guess. But what you're doing though is by continuing to make your best guesses, hopefully you're becoming more and more accurate over time by continuing to practice budgeting. You're learning to anticipate things that you didn't know were going to be there from the get-go, but now you start to see, hey, I have these. Always have something that comes up throughout the year, so I'm going to build 5% of slack into my budget, right? Just so I have that room. Those things are going to make you a better budgeter. So be thinking about that as you move forward. It's not going to be perfect. Not going to be perfect even as you go for, even as you've done it many years. But you're definitely not going to be perfect as you begin. But just keep practicing, and it'll continue to get better and better, and you'll get more and more accurate. So I mentioned some of the easiest ways. Obviously, financial statements, a previous budget, that historic data in an accounting system like QuickBooks. All right. Okay, so you don't have any of that information, and so one of the I have another slide in here. We're going to talk about where you might get some other information for this, but let's start looking at kind of. I'm going to use a business case here, and I'm going to also talk about the personal. But what we're going to start with, if you're looking at a budget, generally we have two sections of the budget. All right. And I should have brought this up from the get go. I should have a budget that we can kind of look at. But a budget has two different sections. And I'll actually pull up a budget here and the tool that we're going to be looking at. I'll bring up the Excel sheet. Actually, you know what I have to do here? Give me 1 second. Let me escape that. And now I can go back and share this. And let me share my entire screen. And I think that'll bring that up. And let's pull this up here. So this is a budget, and we'll be looking at this. I'm going to show you, I have this built in Google Sheets for you guys, and you guys can download this. You'll see the files in the lower left-hand corner under files. This is the cash flow statement exercise blank sheet. This is an Excel file. If you guys just wanted to print it out and fill it in by hand, I also gave this as a PDF. And like I mentioned, actually, well, I'll just do it since I have it here in front of me. I actually have this in a Google Sheets, so you don't have to have Excel to be able to fill this out. Google Sheets, if you have a Gmail account, is totally free of charge. I've shared that in the chat box as well. And you can if you're signed in to your Gmail account, when you click on that link, it'll open up the form in Google Sheets. You won't be able to edit it, but what you'll be able to do is to make a copy to your account, and now you have that forever and can experiment. But up here, the way that we generally have these budgets is, now this is, we're projecting monthly, right? And we could have an annual budget. And what we would do is we would add up this at the beginning of the year. So what we'll do is, instead of looking at all these different months, we'll just look at the first column. And I'll actually make this a little bit bigger so you guys can see here. So if, we start maybe with cash on hand, and maybe we don't have cash on hand. So we don't worry about that. That is more of a business function that we're using in our cash flow projection. If we're just doing a simple family budget and we really only want to focus on what's coming in, what's going out, we really don't need to worry about cash on hand. But you'll see when we go through this example how we use it in the context of this cash flow projection. But up here, you can see we have cash in, right? So that's everything that's coming into your business or into your family. Here we talk about cash sales. We talk about accounts receivable that's being collected. If somebody is giving you an equity, is investing in your business. If you go and get a loan, those come into your business. You may not have all these, obviously, with a personal a family budget, but you are going to have, you may not have these exact ones, but you actually may have more than this. You may have employment, and you may want to break it down, right? If it's two spouses, you may have spouse employment, job one, job two. You may have a side hustle, right? That may get its own line. You may have disability payments. If you're older, you may be getting Social Security payments. If you're, retired, you may be getting a pension payment. There's a number of different ways that money could be coming into your into your family. So those are the type of things that we would put on this line instead of cash receipts. Okay. And then we have, so that's what's coming in to our business or our family. What's going out is this cash out. And here we have different things like purchases. What that is like inventory. If we have a retail business, we're going to be buying inventory to sell it. We have things like wages, there's payroll expenses, like things that we have to pay to have people employed, cars, rent, telephone, utilities, all that kind of stuff. As the family, you're probably going to have different expenses. Yeah, you'll have a telephone. You may have rent. You may have a mortgage. But you probably have things on here that like meals out, right? You have groceries. You may have things like cable TV. right? Those are things that you could be putting on your budget, and you'll be able to edit all of these and when you copy that over as well. But it's the same principle, right? We're looking at cash in up above, down below we're looking at cash out, and we want that to be in a positive number, right? Because if it's negative, then we have trouble. So just wanted to at least show you what this looks like. And let me go back and get my presentation going again. Let me see if that comes up. Perfect. So, so looking up there on that on those top few lines, looking at sales and revenue, what's coming in to our business, what's coming in to our family, right? And like I was just mentioning on the previous slide, we're going to be making assumptions, right? It's not going to be perfect, but we're just going to do the best we can. So we're going to make assumptions based on the types of product or service that we sell. What do we think that we're going to sell in any one period? Now we break it down by month in that example that we were just showing, because that makes it a little bit easier than just taking a whole year, right? If you got only one payment every year and that comes in, let's say on May 1st, well, that makes it very easy to project for the full year, at least for income. But if your income varies month to month, if it, maybe you have lots of different sources of income, so that creates some complication, breaking it down into smaller increments like months and then building an overall yearly budget does help out quite a bit, right? And you can see even just in making the assumption, if you have a job and you're on salary, okay, that's very easy. My every single paycheck is going to be the same. That allows us to forecast into the future, right? And you may get a raise, something like that, cost of living adjustment. But for the most part, everything's going to be the same. When a business, you may have high months, you may have low months, and it makes it much more difficult to forecast. That's why that historic data is important, right? Because if we have that historic data, that allows us to say, okay, what are normally my busy months, right? And of course, that historic data is not going to give you all the information that you need, right? It is going to be a little bit different, but at least it gives you a good starting point. Okay. So, you know, uh, I mentioned this in the third bullet point. How many different products or services do you have, right? The more products or services that you have, the more difficult it is to forecast, right? Because obviously, the more that you do, the more complicated that it becomes. In this session, we're going to be using a simplified version. We're going to be using like one product. That makes it a lot easier, right? Obviously, easier to show what we're doing, but also easier if you were doing your forecasting. Um, I guess the best thing to say up front here is that, as you do more, you may want to start having a very simple budget forecasting for a couple goods, unless you have that historic data. And then as you get more information, because one of the things we're going to talk about with budgeting is not just doing the budget and putting it on the shelf. When we talk about business planning, we talk about your business plan's a living, breathing document, right? You're going to go through you've built a roadmap in your business plan, right? So you want to go and you say, okay, this road you told me to take didn't work. I'm going to change it. You edit your business plan, you keep going, right? So you're reviewing it. This planning is helping you continue on. Same thing with your budget, right? When we prepare our budget, okay, you don't have to look at your budget every day, but maybe every quarter, maybe 6 months. Okay, here's what my budget is for the year. Oh, I'm way off, right? I'm spending a lot more in this line item than I expected to. I need to readjust. So that's what we're going to be doing with the budget, right? And so maybe when you start, start with a simple budget, and then you come back and say, okay, I'm selling a lot more of this, now readjust and build a more complicated budget as you go forward. Um, you know, there's some more complicated things here, like what is the key driver of revenue? key driver of revenue is oftentimes, like what is your most important product, right? Or what is the number one service that you offer, right? Maybe that's where you start with your budgeting, and you leave some of the smaller items out because that creates a little more difficulty, you know. But whatever you're doing, you're making a guess, right? And then we're going to try to back it up with research, and we'll talk about like where we get that research. So let's start with an example, because I think, if we start getting into some of the numbers, that'll help out a little bit. So, so we've taught Indianpreneurship for a number of years, if you guys are familiar with that curriculum. And so this is a similar example that we use in that curriculum. And here I am a contractor, right? And so I'm doing a number of different jobs, basically handyman service type work, but then also all the way up to doing a major remodel. Okay. So to make my budgeting easier, I have three basic services: small repairs, $500; major repairs, $6,000; remodels, $12,000. And you may say, okay, well, where did I get those numbers, right? Now, of course, I just made them up for this example, right? So that made it easy for me. But if I was doing this for real life, I would say, okay, like, what is that 500? Well, maybe that's just an average of what the typical job that I would charge, right? And so I'm going to replace a water heater. That's going to be $1,000 job. I'm going to replace a doorknob. That's going to be $100 job, right? Of course, now if you add those two together, divide by 2, that's 550. But you kind of get the point. You're kind of that's how you're kind of coming up with these numbers, right? Especially if you don't have that historical data, you kind of just do the best case. You say, well, I think this is what my average small job is going to be, as opposed to, you can see, just having a doorknob. You're replacing a doorknob. If you had that on here, now that's a one line item. You do a water heater, that's a second line item. And you may have a number of different small type jobs you do. Well, if you put all those on here, now you have to estimate how many of each of those do I do. It gets to be very complicated very quickly. So anything that you can do to simplify is definitely going to help you in your budgeting, and actually doing the budgeting. And that's one of the things. I think it's better to be a little inaccurate and simplify, but then do it. Because I think what happens is, and we've experienced this quite a bit in our classes, right? We come, I know everybody that's coming to the class, they mean to do these things, right? They're at the class because they want to learn. But when they get in there, like, oh man, this is a lot of work. And then they don't go and do it, right? And one of the things that we want you to do with the budgeting is actually do it. Okay. So find ways to simplify so that you'll actually go and take action. Okay. So we've come up with the different costs of our different services. And then we've said, okay, how many of those are we going to do every month, right? We just kind of do an estimate, right? For the remodel, we don't have a number there, but maybe we think it's going to be a half of one per year, because that's actually, actually, I think it's that should have been one there. I'm just noticing that should have had a one there for the month, and it should have been like with the major a 1.5. But then we multiply that for the month. That number that we think that we're going to do each of those jobs, right? And you can just see it's just multiplying by there, right? So 500 times 4 or 4 times 12. Actually, what's going on is I think I have multiplied it by I didn't. These numbers are not correct. I am just noticing that. I thought I had these fixed because I did this previously, and my month for what the year is does not match. Okay, so I'm just discovering that. I apologize. Okay, so on the number per year, right, is 60. Well, if you divide that by 12, that's 5. Okay, so instead of 4 there, pretend I have 5. Okay, for the number of year for the major remodels is 16. That's approximately 1.5, right? Obviously, 1.5 would be 18. It's about 1.5. and the number per year for the remodel 12, that would be 1. Okay. What we're doing then, we're multiplying the number per year, right? So we have 60 there, and we're multiplying that by 500, right? In an annual sales, 60 times 500 is 30,000. 6,000 times 16 is 96,000. 12,000 times 12 is 120. And actually, that shouldn't be 12. That should be 10, because 12 times 12 should be 144,000. So my chart's a little messed up, and I think that could be confusing people, but I think you get the gist, right? We get the number, an average per month, what we estimate. We multiply that by 12 for the year, and then we multiply the average cost by the number we do for the year. We get those in the different categories, and we add those up. So in this example, it's 270. Probably the math is way off, but you get the gist. What I have here, though, you're like, well, why do you have the total time? And I have the time it takes there on the left-hand side, the final bullet point. How much time it takes for a small repair, how much time it takes for a major repair, how much time it takes for a remodel. One of the things that we're doing is, also in doing this budgeting, it's doing some reality checking for us as well. Okay. So if I multiply this and I come up that doing this time is going to take 2080. All right. So 2,080 hours. If you guys don't know, that is a full-time job. That's how many hours that you would work in a year. 52 weeks times 40 hours a week comes out to 2080, right? So that's what we would think as a somebody who's employed full-time, they're working 2080. Well, what is the likelihood that you're working 2080, right? Probably you may be having to go buy supplies, right? There may be times when you're sick and you can't work. There may be you're going to need to be doing invoicing. You're going to be needing to do bookkeeping. The chances are that you're going to be working all the time. They're just maybe slow months as well, right? Slow times. There may be times when you want to take off during holidays. The chance that you're going to be working full time is highly unlikely, right? Because your customers are not going to be paying your vacation when you go on vacation, right? They're not going to be paying vacation time for you like you would at a job. So that's what you're also doing. You're also estimating how much time does it take to do these things. And then what you could do is then you could come back and rejigger your budget and say, okay, all right, well, you know what? Probably not going to work 2080, right? Instead, 1240. That's more reasonable. That's going to give me the actual time I'm doing the work that I can bill for, but I'm actually going to be working a lot more on my job. I'm probably going to be doing another 800 hours on my job. I'm just not going to be able to bill for it. But you know what? That's still time that I have to build into the business, right? So what I've done is I've reduced the amount of jobs that I've done, right? And so now I'm down to 45, 10, and 6, right? And there the math should work, right? So that's 22,000, 22,500. 60,000 in major remodels and 72,000. And I add those up and I get 154,500, right? So you can see just by kind of doing some math in my head, kind of estimating on what a small, major, and remodel I charge for those, what the average cost is, doing a little reality checking, that's allowed me to get the revenue for my business, or what I believe my business will have for the next year. Even if I don't have this as historic data, if I'm just creating this handyman service, I can kind of put these numbers in, and and at least I have something to go off into my business, right? One of the things we also mentioned, right, is that we're going to be coming back to check on these things. So so we may find in a month or two that we're way off, we're not meeting what we thought. We can actually come back and change these, right? That's always the benefit of going back and reviewing your budget. But if you were doing this in the personal, right, you may pull out your paychecks, right, and throw in your paychecks here, right? And you don't have this, but one of the nice things is you may not have these different business categories, but like we mentioned before when we showed the budget, you may have different line items that you're bringing in money from in different ways, multiple jobs, side hustle, other ways that money is coming in. Okay. So we'll just do another example, right? From another service base, right? I'm a real estate agent, and my wife's a real estate agent, so I kind of, this kind of is close to home. If I sell a home, I get a commission of 2.5%. My broker gets 30% of that, right? These are kind of just industry standard numbers, right? And so I could be calculating, all right, beginning agents in my brokerage, right? So how could I find that out that they do have 4 transactions this year? I could ask. I could ask my broker. I could ask around to some of the veteran agents, how many transactions did you have a first year, right? Doesn't mean you're going to have 4, but it's a good way to get that estimate, right? Average home price in my market is 200,000. And you can go out there, you could pull that off of what they call the MLS, multiple listing service. You can kind of see what the average home sale price is. Maybe you're working in, because you're beginning, you're not 100% minus 30. That gives me 70%. And I multiply that times 4 transactions a year gives me 14,000. Now I have my income as a real estate agent, right? Okay, I'm doing beadwork. Okay, so I make beaded earrings. I'm going to charge on average of $50 per set of earrings, right? How did you get that number, right? Well, you may have just come up with that. That may be, you may have looked at all the cost that goes into the earrings plus the amount of time that it takes to create those earrings. That's how, and you set the price as $50. You may have gone out and to different sales. You went to the art fair. You saw online your other friends what they're selling their earrings for. You may have gone to the powwow and saw some of the vendors there and what they're selling. You know, and that's how you came up. There's a number of different ways to come up with your pricing on your individual items, but you've come up with $50 and you believe that you can make 40 sets of earrings a month. That's what you're going to do. You have childcare duties and everything. So you're going to make, or I, in that case, right? Because I'm the one that's making it. So I can make 40 sets of earrings a month. And I think I'm going to sell 75% of these a month, right? I'm not going to sell all of them. I'm going to sell some of them, right? And then some of them just won't sell. So I just multiply 70 times 40, right? That's going to be 30. 30 times $50 is 1,500. Now I've come up with my income total, right? And then if we plug this into our budget and we see, 3 months later, okay, I've only sold 10 earrings. Well, now we're going to have to readjust, right? Because obviously I'm not selling 30 a month. I'm selling 3 a month, right? And so that's the importance of always going back and looking. But you can see there's different ways that you can get this information into your budget, different ways to um, approximate the information. Other ways that you can come up, with numbers, check out your competition. We just mentioned that in the example of setting our price. Well, we can kind of see what our competition is charging for their prices, right? So that's where we get our price. And then we can kind of say, well, maybe I won't do as much as my competition, but I'm going to do half, right? And you can kind of estimate how many jobs that they're doing. You're never going to really find out from your competition because you don't have their information, right? You don't know exactly how many jobs they're doing, but using your eyes and ears, to give you an example in the small business context, one time we were doing this presentation, and one of our clients wanted to start a Philly cheesesteak business. She was really into doing Philly cheesesteaks. And so it just so happened there was a highly rated Philly cheesesteak restaurant off res, right? So if you wanted to do it on res, actually, it was off res, but in a different town. This was in Nevada, about an hour away from where we were teaching. And I said, first, you can go down there. I told her, one of the things that I would suggest in doing market research and doing what they call competitive analysis, checking out your competitor, is go down and sample their food, right? Take it apart, buy a sandwich, weigh it, all that kind of stuff, right? That's all that good stuff that you can do in competitive analysis. That's what Samsung's doing, right? When Apple comes out with a new phone, they're buying that iPhone and they're taking it apart, right, to see what components they have. That's going to help Samsung get better. And you can do the exact same thing in your business, right? And use those services of your competitor, especially when what they're selling is not expensive, right? Obviously, if you want to get into I just came up off the top of my head, I said well drilling, right? You're probably not going to go pay a well driller to come out and drill a well at your place and spend $30,000, but you're probably not starting from a well drilling from zero, right? You're probably already in the business in that case. So, but if you're starting a restaurant, things like that, it makes it very easy to sample from your competitors. But another thing with that competitive analysis is just sit outside, and you're not going to know what the average ticket is, but you can kind of estimate, somebody's going in there and they're buying, a couple sandwiches, and you can just count how many customers they have in a day, right? That is a great way to kind of find some information that you can utilize in building your budget. Okay. Some other ways that you can get this information. And so now we're going to switch over and think, okay, this isn't very personal to what what's happening locally, but maybe I got to go more nationally. So, you look to industry standards, looking at industry associations, looking at market research reports, industry reports. And so I just wanted to show you real quick. I have a couple things up. Let me pull up my web browser here. So one of the places I think here, I'm sorry, switching my things around. So first of all, I just pulled up, we had another presentation that we were doing. We had somebody that was interested. It was a florist. She was working for a florist. So that was a great way that she could get money in another town. But what she wanted to do is, so that flower shop was off res. She wanted to do her business and really focus it on multiple reses around Nevada, right? And so it was kind of a different type of business. But if you wanted to kind of find out, hey, I need to, what is a normal flower shop? What does it cost in rent and all those type of figures that you want to, so you have some things to plug into your budget. A lot of these industry trade groups, they have things, information, especially if you join up. So these are behind a paywall. So I'll click on them, but they're not going to give you much information. So here's Floral Accounting 101. So, and you can see it's behind a paywall, but I'm assuming that they're going to give you a lot of good numbers on what it takes to run a floral business, and that can allow you to create, plug into your budget with some really solid numbers. Right? It's not going to be totally right on to your situation, but it's something, right? Because a lot of times when you're starting from scratch, right, you don't have that historic data. But you're like, oh man, where do I even start? What we're doing here is we're trying to at least give you a place to start, a way to get some information into your budget. Okay. All right. So what's another way? So bplans.com, this is a service of Palo Alto software. What they want you to do is buy a live plan, which is their business planning tool. But in the interim, they have built these different business plans that you can download totally free of charge. And so let's say we were going, I'm going to see if they have a retail business here. I clicked through earlier, food and beverage. I'm not, oh, okay. So here's retail, e-commerce, and let's see if they have floral. Okay. So here's gift shop business plans. Open this up. Here's a florist business plan, right? So maybe we got some information from the Society of American Florists. But here, we're also going to get some information. Now, what we don't know is we don't know if these numbers are accurate, but what they've done is they have given us some place to start. They're giving us some financial data. And so the thing is that we don't know is this break even? It's very simplified data. But if you don't have anything, going to something like B plans, at least what it might do is give you the categories, give you some of the different types of numbers that you're wanting to be thinking about, and give you some information. Like here, we can see for these, like what are different expenses that I should have, and here's sales. And I think what they're doing is they're having different years of sales, right? As your this is year 1, year 2, year 3, as your business grows, and you can kind of say, okay, so if I think that I'm going to sell $80,000, the cost of sales, right, or cost of goods for that is those flowers that I'm actually buying and then reselling. Oh, it should be about a quarter or a third, right? That makes it a really easy way to say if you've been able to calculate what your income is going to be. Now you can have a really at least you have a number there that you can put for an expense. What's that cash going out on inventory that I'm having to buy? And they have a number of different cost suggestions there as well, right? No matter what you're getting, you're going to be tinkering it and changing it to your own case. But here's just more data that you can go to. Another place that you can go to, of course, now it logged me out in the interim. So let's see if I can get back in. Let me see if it's going to come back. Okay. All right. It came back. So this is Gale Business, and they have an entrepreneurship section. Another big competitor to Gale is EBSCO, EBSCO. And what these are databases that are provided by your library, right? And not every library has these, but I would encourage you to check with your local library. And if you ever travel into a bigger city, see if they'll give you a library card, because a lot of these resources, if you get that library card, are totally free of charge. For those that are listening out here in California, one of the cool features of California libraries, if you're a resident of the state of California, you can go into any public library. Obviously, you got to document where you live, and they'll give you a library card. So I have a library card, not just here in Amador County where I live, but I also have a library card at Sacramento, which is the next county over. I also have a library card at San Francisco Public Library. I have a library card at Los Angeles Public Library. When I went down to Los Angeles, went into the library, and had a piece of mail with me. And, I knew I was going down there, so I made sure I had some documentation. And now I have access to all those resources that those libraries provide. So check out the library, because there's a bunch of great information besides just checking out books. But with that, these different libraries have things like sample business plans. So here, if you guys can see that, I'll zoom in a little bit. It's a sample business plan. And I don't know if they're going to have, let me see if they have a floral business, or I'll just put florist here and see what I come up with. Now this is a farm actually producing the flowers. Here's florist from the business plan handbook. Okay. And you might want to check to make sure that this is not duplicated, because sometimes a lot of this information gets duplicated. So they may just use the B plans. I have seen that before, but this looks like this is something that's totally different. But you can go through here, and here's a lot more detailed information on sales. I know this is very difficult to see because this is very small, so I'll see if I could bring it up. But here's different sales. Obviously, they're looking at a much bigger business. If you can't see that, that's 567,000. In that previous business plans example, we were looking at a business at about 80,000. But it gives you some of the different things: franchise fee, working capital. You may not have a franchise fee, but at least gives you a a thought process. Do I need a franchise fee? Okay, no, I'm not starting a franchise. I don't have that, right? So you take information that is going to be useful to you. You leave the information that's not useful to you, right? And there's other financial information in here as well as we go down that you can use in your budget. Generally, there's a whole section. You can see all this kind of information as well here, right? And so that's another way. Go into the library, seeing what type of business databases they have. Also, market research reports will have a lot of this good information into it. If you go and contact your local SBDC, most SBDCs in the country have access to something called IBIS World. IBIS World is very expensive. They're the gold standard when it comes to market research reports. So the SBDCs often will pull an IBIS World report for you, or at least portions of one, because they're so expensive, and give it to you totally free of charge. So check that out. A lot of libraries, they have the EBSCO has a Business Source Complete. They have some market research reports. There's another company called BizMiner, and BizMiner produces similar reports. Some libraries have access to BizMiner, but BizMiner also has a free website called BizStats. So it's not going to be as detailed as a marketing research report, but you can actually look on here, and this will give you some information as well that you can add into your budget, right? So if we're looking at a sole proprietor here, and let's see if we go to retail, and let's see if we're going to have a floral or anything. So nothing, no floral, I don't think. And let me just go back and search here. Let me see if I can search. Nope, it's not going to allow me to search for sole proprietor. No, just the dollar amount. But you try to find something that's as close as you can. And so let me go back here to retail, and I'll just go to general merchandise stores. And what this is doing, and I'll bring this up so you guys can see this, make it a little bit bigger. It's saying, now it's not giving you the information of what size store you have, right? You saw earlier, we just did the example of how we're estimating, the amount of income we're coming in. But what you do is, after you get that number, right, that becomes that becomes the sales number. Then what you do is you can multiply, and it has given you industry averages for each of these different line items, right? So the average expense for the year, let's say I'm just going to do 100,000 to make it easy. But if you had $100,000 in sales, you're generally spending of a general merchandise store 10% or $10,000 in inventory, right? Now I don't know. Oh, you know what? I'm wondering if that's keeping inventory over, because normally your inventory would be much more expensive than that. And you can see that that's actually the cost of sales, right? That's the actual inventory you're selling. So that 9.66% may be inventory that's held over. But cost of sales, and the cost of sales and labor, then you come down, you subtract that out, that becomes your gross profit. And here's all your other expenses, all done by percentage, right? So if you have $100,000, your average rent will be 5%, right? 5% of 100,000 is $5,000, right? Is that realistic? You can see in your market if that's realistic, right? And you adjust. But this is just another way to get numbers in on the expense side, right? Because that's one of the things I know it's difficult when you're just starting getting this information into our budget. Okay, all right. So I think we've mentioned that. Also, one of the things is, as we're going to do our projections, we're going to look at easy stuff first. And so there's a way to kind of put in this easy stuff. And I think when you're looking at the budget for the first time, it gets to be a little daunting. But in the when it's a little daunting when you're looking at the budget and it's a blank page, right? But if we could take chunks of that, then we say, oh, I've already figured out half the budget. That makes it a lot easier to finish the rest of the budget. let me just see. I saw Kelly Dennis was interested in getting the B plans link. So let me go back to there. I think I just closed it. Let me see. Do I still have it? Let me go back and do a history real quick. And I'll just click here to B plans and copy. And I'm going to throw this in the chat box. Oh, you know what? Awista did it. I didn't have it up. She beat me to it. I wasn't even paying attention. Sorry. Okay. Sorry about that. All right. I'm reading sequentially. I should have read the whole chat first. So, all right. So back to the presentation. And then, you know, we mentioned earlier different types of budgets. One of the things, my associate Lynn, who's on the line, one of the things that we've taught a lot of times when we're doing our business planning is the startup budget, right? So this is the budget that you want to compile when you are just starting your business, because you're going to have certain things in your business. Like if you're starting a retail store, right? We just have seen different things about looking at floral business, looking at a general retail store. You're going to have things that you're going to probably buy once that you'll never buy again, or it will be very infrequent. You know, that's going to be like your shelving. That's going to be like different store displays. That may be your cash register, right? So sometimes it's great to create an independent startup budget because that budget is going to be very unique. That's also very valuable if you're going to go for a loan, right? Because then you could say, hey, if you give me a loan, this is what I'm going to be spending the money on, right? And it's very clear and it demonstrates to the lender exactly what you're going to be using the money for, right? But you may also, if you're doing, you know, be thinking about those one-time big expenditures. We're talking about startup budget. Even though there may be multiple little ones, they add up to kind of that one-time event. But also be thinking about as you're projecting out, is there going to be something real big that I need to buy? Maybe I'm having a surgery, right? And so, you know, and there's going to be that big expense. That's also something as you see that big expense, that's going to allow, and that's why we do this budgeting. We can say we're going to have this big expense 6 months out. So that's going to take us negative. I don't have the money for it. Now we can start planning and start building up a savings reserve to go to that, you know, to go and save towards that big expense. Okay. Just real quick, fixed costs versus variable costs, because this gets you know, a little bit on the accounting side, and I don't want to run out of time. There's these two types of different costs in your business. You've heard me mention a number of different times cost of goods sold. That's a variable cost. Essentially, what happens as your sales rise, right? You have costs to make those sales. In a retail store, it's inventory, right? And so as you know, as your sales rise, you have to sell more, right? And that's that cost of goods sold. Okay. And so as you sell less, the cost of goods sold goes down. They're not totally one-to-one because you have different profit margins on different things that you sell. But basically, as your revenue, your sales, your income goes up, those costs go up. So, and they kind of, if you were looking at a chart, they go along together. Those are different than fixed costs, right? And fixed costs, they don't go up or down depending on what you sell. That doesn't, but fixed cost is a bad term because fixed does not mean they're fixed, because your phone bill can change every month, right? You know, maybe a little, you know, $1 more here, or back when we used to have landlines and we'd have, you know, long distance, those long distance charges added up, right? And you may have a lot of long distance one month and have no long distance the next month. Those are still fixed costs, even though they're varying from month to month. Basically, the reason why it's a fixed cost is because the cost is not dependent on sales. And one of the things we use in this is the example we use is like utilities. And everybody says, well, look, they're changing, right? You're doing more work. Well, technically, you can have utilities and electricity as a variable cost. And it would be counted like that in very large businesses, right? Like if you have manufacturing, you can tell exactly how much electricity you're using to certain machines. Now you can use that and calculate that as a variable cost. But for the most times, yeah, it may rise a little bit, but we don't know exactly how much it's rising depending on how much work we're doing. So, so as a good rule of thumb, variable costs go up and are kind of in lockstep with as you sell. Fixed costs don't really depend on what you sell. And why do we even mention this? We're mentioning this is because as we're going to project these on our budget, like if we don't know our revenue, or if our revenue is going up quite a bit, right, and we have sales that we need to sell to make that revenue go up, we need to have that increasing every month, right? We can't just go and project that our variable costs are going to stay the same, but our income's going to rise, right? Also, if it's going down, it's going to be going down. The fixed costs are not going to be the same, are going to be very similar month to month, not dependent on sales. Those are much easier to predict. Fixed costs, by the way, you may have heard this term overhead, right? And so that's what fixed costs are. And so one of the things that I'm going to suggest is, hey, let's start by projecting fixed costs. That's going to help us out, at least get some of that budgeting out of the way. And then we'll worry about variable costs later. But I at least wanted you to kind of know what it is in case I use that term. Okay. So, so here, beaded earrings. What's variable costs? Seed beads, hooks, wires, shells, stones, right? So it's all the components of the earrings, because I buy more as I sell more earrings, right? If I'm not selling a bunch, right? I have even if I haven't made the earrings, right? I haven't sold a bunch, so I still have all my inventory of individual components that I can use next month. So so that's on the beaded earring, right? And so and one of the things is we can calculate what it costs to make this necklace by looking at these variable costs. So if we add all the different things, we're looking at this necklace right here. So we add up our seed beads, our hooks, our wires. It's going to cost $5 to produce, right? And so as we look at this, 40 necklaces a month times 5 is $200. That's going to earlier we talked about what we're going to be selling these for, right? We're selling these for 500, we're selling for $50 a piece. Now what we've done is, by being able to calculate what each one costs and the number that we believe that we're going to sell, now we've got an expense in. So you can kind of see, just by breaking things down sometimes into smaller components, it allows us to start projecting out. And I know this is a little difficult, and it's difficult doing this on the computer where you don't have the form in front of you, but we're going to get to the form here in just a second, and you'll actually see how it gets laid out. Okay. So this is just, I was going back and forth. So I apologize. Some of these slides are kind of duplicated. So let's plug in these numbers. Let's actually get to this form so you can kind of see what we're doing. So we're projecting cash, because cash is king, right? If we run out of cash, our business closes. But also, one of the nice things about cash, it allows us to talk about what are different ways that we can remedy something if it happens in our budget, and we can kind of look at savings, credit, things like that. So we're going to spread our income out throughout the year, do the same thing for expenses, right? We just talked about creating a calculation for variable expenses, because that will allow us, based on what we sell, allow us to create variable expenses. And of course, this is generally going in a manufacturing type business. And when we say manufacturing, even making earrings is manufacturing, or a retail type business. If you're doing a service type business, or if you're building your own personal family, right? You're not necessarily having a variable expense that you're going to plug in, right? There are things that vary, right? If you are, before COVID, if you're commuting to your work, right, you have that gas expense, right? And all of a sudden you're not commuting during COVID, but you're still working. you don't have that expense. So there is some variability there, but generally, like with gasoline, we're just gonna, having it as a variable expense adds a little too much complication, right? One of the things we're trying to do is simplify. So generally, you're not going to have a variable expense when we're looking at a service business or you're looking at the personal family business. And then we're going to plug in expenses that are predictable and remain the same each month, right? That's going to simplify the budget, make it easy to at least get some numbers in there. So let's take a look at, so you saw the budget form that we used before. So this is it. I just threw it up here on the screen to kind of show you how this is working, the math portion of it. Okay. So we start with cash on hand, right? And you're going to enter that. And you may not have any cash on hand right now. Totally understand. That's fine. But if you did have cash on hand, we would throw that up there in that first box. Okay. And then if you look at that second number, I have that second number. That second number is actually going to be coming from the bottom. And every month you're going to start with a different cash on hand. And so you'll actually see as we get into the form. And what's real nice about doing this in a spreadsheet, and that's why we built it both in Excel and in Google Sheets. If you have access to see this in a software package, and you can see these numbers changing as you're entering, and you don't have to do the calculation. So it's a double bonus, right? Reduces the math errors, reduces all that work of doing the math, and then you get to see, and it makes it a lot easier to change numbers and experiment a little bit. But the number that when you end for the time period, you're going to bring that number back up to the top, and it's going to start the cash on hand for the next month. Okay. So you're going to enter receipts, and and you can see that first line, we have startup. So we wouldn't have any income, right, in startup, right? Typically we wouldn't, because we haven't started selling yet. So we would be entering things there for cash in month one and moving forward. Okay. Then we're going to add up all our cash receipts. And then what we're going to do there in C is adding our cash on hand to start with. We're added all our cash receipts, and we add those two together, and we get our total cash available. Okay. And then we just start going down and entering expenses. Okay. We total our expenses. We have other operating costs here. The reason why we have this other operating costs is because if you guys are familiar, and it's a little bit much for this class, but if you were looking at a profit and loss statement and a balance sheet, those are the two main financial statements that we use inside a business. And there are certain things that go on the profit and loss statement and some things that go only on the balance sheet. And so what happens is, like with a loan principal payment is not an expense. So you don't, and the profit and loss statement is income and expenses, and then you get profit, right? That's the simple way, right? And that's actually what you're seeing a lot here in the budget. But a loan principal payment is not an expense. When you pay interest, that little bit of interest is an expense, but the loan principal just reduces the liability you have, and liability is on your balance sheet: assets, liabilities, and owner's equity, right? And so you would actually, as you make a loan principal payment, it reduces the amount owed as a liability. However, when we're doing cash, that cash is coming out of our budgets, coming out, like if I'm paying my car loan, that's coming out of our family budget for the month. If I'm paying it out of my business, that money's coming out. And so we want to account for it, that's money that's being spent. And so that's what we have, these other operating costs. We broke these down as these would be things that would not be on your profit and loss statement, but it's still cash coming out of the business. So that's why those are broken out separately. And then you would add those together. You would add D&E, right? So you're adding your expenses plus your other operating costs, and then you're subtracting. That was line C. If you remember before, we added cash in. We had our cash in versus our cash in plus what we had our cash on hand for the month. and that was our C, our total cash available. And now we're subtracting our total cash out F, and then we get our ending balance. A little complicated the way I'm explaining it. Of course, with my cold, mixing up the numbers isn't helping, but you'll actually see this when we get going on this example in just a second. And then what we do is whatever's down there in the bottom of that statement down there in G, we just bring that up, and it starts the whatever it ends in G for the month, we start the next month with that cash on hand. That's very simple. Normally, a little under the weather today. Normally in class, I would be screaming. I'd be getting everybody pumped up. I'd be like, hey, so where do we take this in G? And then they'd say, take it to A. Woo! So I'm going to be a little reserved today because of my illness, but that's want to get you excited about building your budgets. Okay. Okay. So before we go and talk about after we complete the budget, let's go through a little budgeting tool. So I've already plugged in what the budget looks like, and I'm actually going to pull up a budget here that I can work on. And so I'm going to zoom it in a little bit, but this is the Google Sheets version. Exact same information that I have on the that Excel document. Okay. So I'm going to use the example just real quickly of me doing my earring business. Okay. So if you remember, we calculated that I would sell about 30 earrings a month, right? And or 30 pairs of earrings a month at $50. That's $1,500. So a real easy way to start here is I'm just going to start with cash sales, right? Not looking at cash on hand or anything. I'm just starting with cash sales. Okay. And so I'm going to just kind of multiply this across here. And cool thing in Excel or Google Sheets, if you see this little blue dot down here, all you got to do is pull and drag that across. I'm going to drag it across here. It's going to go all the way here to the end. And I let go, and it fills it all in for you. Don't even have to copy and paste. Real easy thing to do there. So I don't know that I'm going to sell $1,500, but that's what my estimation is, right? And I don't, like I said, we're going to come back and check our budget later, right? We're going to try to be on top of it and adjust our budget as we go. So it's a good first step, just getting that information in there. Okay. So now, and of course, if you have if you're doing this for a family budget, you could just be taking your paycheck and say, okay, this is what I make every week. And you're multiplying that, times 52 divided by 12. The reason I did that is, right, because if you're getting paid every 2 weeks, you may be getting some more in some month than the other. It may be easier to just add it across in the months, right? And the way you would do that. And I should have said, multiply it by 24, right? 26 pay periods in the month, and you divide it by 12, right? And that's how you would get your monthly pay. Okay. And then I'm not going to worry about accounts receivable. Accounts receivable is just if I was invoicing people, I would put stuff there. Nobody's investing in my business just yet, and I haven't taken out any loans. Okay, all right. So there's my income. All right, I've already done my revenue. I've already built my budget for the month or for the year for revenue. Because if we go and we look at the end here, you can see this is already built, and there's $18,000. Right, it's already built for me. And you'll also notice here, when I mentioned earlier about the spreadsheet calculating everything for you already. That's what's kind of nice about throwing it into a spreadsheet. I built this, and of course, you guys can use it. You can add rows and everything. It should preserve the integrity of the sheet. If it doesn't, send me an email back. I'll fix the sheet for you. But you can see, I didn't have to add that myself, right? Now, of course, it would have been easy to add. But if I had a bunch of numbers here, or I had more lines, or when we get down in expenses, where we have tons and tons of lines, that's a lot of work to do all that addition, right? And so you can see here, it just added it for me. It added this box here and this box here to give me this box, right? There was nothing to subtract. It automatically took this number here in G and moved it up to the next month, and cash on hand. So that's the real nice thing about a spreadsheet. It's doing a lot of this math for you. And so you don't have to worry about getting that. Okay, just real quick, had a question here from Natalie. Can you export sales from Square to Google Sheets? I believe you can. I believe there are reports that you can put in there, but the one of the things with Square, it probably is going to give you a sales report that will have like your monthly sales in there, and you could even like that would only be 12 sales numbers, right? Each month would give you a different sales total. You could plug those in easily enough, as opposed to trying to copy that in. You may be able to copy it in and paste it in, but as opposed, what I wouldn't recommend doing is trying to import all that data in here and having a bunch of different lines, right? That may be something you might want to do in an accounting software, where the accounting software is doing it for you behind the scenes. But for here, I might, and actually I do a lot of typing myself, as opposed to, because a lot of times when you're trying to make it work and make two different types of things talk to each other, it's difficult. I may just want to just hand type in the number, but they should give you a report, a monthly report, that would allow you to do those plug those numbers in pretty easily. Okay, so we got our income here. Okay, so what are we going to do next? So I actually have a little sheet here that I have my different prompts. You know, so just on the revenue side, I did a little research, and I said, Christmas is coming. I think I'm going to be a little bit heavier down here. Okay, a little heavier in November and December. And I've really just getting out there. I'm just making stuff, but I really haven't been getting out there selling. So I think it's going to be slow. But our big powwow happens in July, and that's where I think I'm going to see a lot more sales. And so what I did is I changed my revenue. Now I don't have to do this, but I just wanted to show you how I kind of anticipated and change different things, right? So I'm going to come here, make these few 1,000, then I have 15, I go back down to 1,000. Then remember, I mentioned here in July that we're going to have our powwow. So I think I'm going to go here, do $2,000 worth of sales. That's kind of launched me. I'm going to get in here some 1,500, and then I get in here in November and December. I think I'm going to go up here, go to that. Still 18,000, but I've just spread it out a little bit different. Okay, that's another thing. Once I get it on sheets of paper, now this allows me to start doing this modeling a little bit different. I can start thinking, okay, when am I going to be heavy in sales? When am I not? Am I just starting out? It's probably going to be ramp up throughout the year. And of course, if you're doing a financial budget, it's probably not going to be like this. However, it could be if you are working in a job, but you're planning to start a side hustle in 6 months, right? In 6 months, you may plug that information in. Okay, so now we go down, and I might hide some of this so that you can see this. So you can see some of the things I'm doing below, but I did want to show you what some of the different categories were. So I'm just going to hide these rows for the time being. I'm going to come down here. I'm going to start working on expenses now. Okay. Excuse me. So we talked about our cost of goods sold as $5 a necklace, right? That's what it's taking in the materials to make each one of those necklaces. And I'm making, 40 necklaces a month. So that's $200 a month, right? And if you remember, we said that we could just pull this across. I should pull it one more. So, you don't have, oh, actually I went too far. Let me take, you could try to line those up from these numbers here, but you're probably going to be making more up front than what you sell. So you're probably building up your inventory. So you probably are making 40, right? Now, maybe here later on down in some of these months, you may cut back a little bit, right? Because we didn't estimate that we would sell every month. We said in our initial one, when we came up with our $1,500 total, our initial estimation, we said that we would sell 30. So we may have a lot of necklaces that are available. We may want to stop making the necklaces until we deplete some of our inventory, right? So as you go through your budget, you may want to make those calculations. For the time being, I'm just going to, um, I'm just going to leave it. But one of the things that I also did is I did come here and I said, well, I think I'm only going to make, um, only 20 necklaces here because, Christmas is busy. I was doing a lot more selling as opposed to manufacturing. Also, we have the holidays, so I'm probably going to have fewer days to be making stuff. So I just reduced it a little bit there, right? Also, and this is kind of this is a fictitious example, but one of the things, you know, I'm saying that I'm making these necklaces and I'm buying them the same amount each month. I may also be buying in bulk, right? And I may have a huge purchase up front at the beginning and not have to have these purchases for many, many months. I may have, with all those left over, I may be not even producing the necklaces, but I still have all the supplies because I made a big purchase of them at one point, and I don't have another until I really sell down and run out of something. I don't really have another purchase, right? That's how you can make them more realistic and really allow you to think about it. But for the time being, I'm just leaving it like this. Okay, so I estimate that I'm going to be using $50 in gas, just going to the post office buying stuff. So, so I just carried that across, and you can just see how we're building things. Now, one of the things I did think about, and I apologize, I should have split this. Let me see if I could. Freeze column one, so you guys can see. Oh goodness. Okay. Well, let's see if I can freeze column. Let me see if I can freeze this. I just want to freeze this so. Well, that'll work. Perfect. Wanted you to see this as I'm moving through things, so it's not complicating. So you can see which line items I'm working on. So one of the things I estimated is in month of July here. I'm going to the powwow. I'm going to have more gas. So I just threw in another $100 here for that powwow gas. Okay, so I bought business cards because I want to be able to hand those out. So normally what I'd be doing here if we had more time is I'd be asking you like where these expenses go, but I'm just going to tell you for the time being. So with the advertising, we're going to throw that in for our business cards. It's going to go there. Maybe I even run some Facebook or Etsy ads, and I'm going to run those here on the back end as I get closer. And so I'm going to have bills here of 100, 100, and 100. And see, I'm just anticipating through the year, the different things I'm going to be buying. So I'm going to have some office expenses in here. I have my cell phone that I'm paying out of business, right? So I'm gonna put $50 in here and bring that across. Okay, got my phone here. And I mentioned I'm doing Etsy, so I'm shipping. So I have other expenses here, and I have some blank line items so that you guys can do this as well. So let's say I have 100 in shipping expenses here, 75. Come down here, I have 75. And one of the things I want to do here, I'm going to do something because we are running out of time. Awista, just want to know, did you want to close out or do you want me to go a little bit longer? I'm thinking another 15 minutes or so.
If you don't mind, I can go ahead and close out for those folks who can't stay the additional 15. That way they can fill out the survey. And then as soon as I'm done, you can go ahead and pick up if that's
Sounds
okay.
great. Sounds great. Do you need me to stop sharing or can you take it over from here?
I can take it over, no worries.
Okay.
Once I bring back your screen though, what you are sharing may disappear.
Oh, no problem. I know how to get right back on it.
Okay. I'm just gonna do there we are. Alrighty. So thank you everyone for joining us today. I went ahead and launched the survey. For those of you who can't stay, I greatly appreciate for you joining today. Please let me know how we did by answering the feedback report. It is greatly, greatly appreciated. Our next webinar is going to be April 25th. It is going to be Financial Wellness, How to Create Generational Wealth for You and Your Family, presented by Michelle Meza, owner and CEO of Luxy Coaching and Consulting. It will be at 2 p.m. Eastern, 1 p.m. Central, 12 p.m. Mountain, and 11 a.m. Pacific. As always, registration is free. Please feel free to access this recording and any other of our recordings on www.nativelearningcenter.com. We have a Cathedra Webinars tab and a recorded webinar section. You can click on any one of the webinars that we have done for the past 18 months. Feel free to view them and share them with your friends and colleagues. Check out our upcoming events as well on our social media sites such as Facebook, Instagram, Twitter, LinkedIn, and Snapchat. We even have a podcast titled Hopatenga. You can find that on Simplecast, Google Podcasts, Spotify, and Apple Podcasts. Once again, I want to thank all of our participants for joining today. I hope you have a wonderful day. For those of you who would like to stay on, Mark, you are more than welcome to take over the screen now.
Okay, sounds good. All right, let me get back over there.
There you go.
Perfect. Thank you. All right. Let me share my entire screen here. We're getting involved with numbers. And so what I did not want to do is just go faster and faster. And then that just confuses everybody because when you get these numbers going, it does get a little confusing. Okay, so I'm back in. So before I get back into the numbers here, let me answer. Janine asked a question. Is it true that I cannot recognize my inventory prior to purchasing my business license? Okay, no, that's not true at all. So all I would say with that, as far as inventory, okay, so inventory is a little tricky. For accounting, you're technically not supposed to recognize inventory until you sell it, right? That's why they call it a cost of goods sold, right? That's what inventory is. It's when you sell it. It's a little bit of a crazy situation. If we have to pay for it on this example, if we're having to spend cash for it, we want to calculate that, right? Because that, we're actually, the cash is coming out. But in traditional accounting, if you're doing accrual-based accounting, you're going to calculate it only after you sell it. That's not what you were asking, but because you were asking, prior to purchasing your business license. So what I wanted to mention on that, and this doesn't go just for inventory, this goes for any business. Okay. Good idea to get a business license. Some people are doing their business on res, some are doing off res. Sometimes the tribes will have their own business license. Sometimes they don't. Same thing with a municipality. Sometimes a city will have a business license. Oftentimes a business will. Oftentimes a city will have a business license, but sometimes it's a county license. Sometimes it's only for the city. So like in our county where I live, if you live in the county, not in a city, you live in what's called unincorporated Amador County, you don't have to get a business license. So that would be right there, right? Like if I don't have a business license and I don't have to get one, I assume they're going to want me to recognize my inventory. So that's what the IRS cares about, right? When you're dealing with taxes, and that's a lot of times what we're talking about when we're recognizing the inventory, is that we're able to deduct that on the sales that we have. And you're going to the IRS says whether you have a license or not, if you are engaging in something in a profitable enterprise and you're trying to make profit, they want you to file a Schedule C and report that income. And then on the Schedule C, it allows you to take expenses off from that away from that income, so that just like any other business, that the tax burden is based on your profit, not on your revenue. All right, and that's what's happening when you report your sales, then you take expenses, and the remainder is your profit, right? And that's essentially what you're being taxed upon. So, and so the IRS wants you to do that, and they're not asking if you have a business license. They don't care about that. If you're engaging in business, and that's like, and we get this question all the time, about like, oh, well, I'm on the res, so I don't have to report that. Well, you may not report it, you may never get caught, but technically, the IRS wants anybody that's engaging in a business to report it. And I'll just say, why is it good to file your taxes? Obviously, if you are making tons of money and not paying, not paying taxes on that, you're saving tons of money for yourself. So I get, if you never get caught, that's great for you, right? Of course, if you get caught, you could have huge penalties, all that. So I'm not just speaking to that. But if you're going to go for a loan, right? So many people don't formalize their business, don't pay taxes, and then when they go for a loan, the lender just says, well, hey, you doesn't look like you've ever been running. You're like, oh, no, I've been doing it. I just haven't been reporting it. Well, to the bank, or the bank or the lender, CDFI, it just kind of looks illegitimate, right? We actually had a situation here in California. The state government was giving away tons of grant money. And this was, during the pandemic, right? And so we were getting calls left and right. We're getting calls from so many native entrepreneurs who were saying, hey, we want to apply for this money. But none of their income was formalized. They weren't filing their taxes, or if they were filing their taxes like they had a job, they weren't reporting any of their business income. And because they weren't reporting their business income, they couldn't apply. And if they had a business like over $100,000, it was 100. Well, from 0 to 100, I think you could get 5,000 for free. From 100 to 2 million, and that was just on revenue, right? So you could have lost money, but if you had, or it was 100 to 1 million, you could get 15, and over 1 million, you got $25,000. So if you're not filing your taxes, that was just money that wasn't accessible to you. So there is a reason, and oftentimes people don't realize that there are so many expenses that you can write off. It just makes sense to file your taxes, right? And so I'm climbing off my high horse, but I just wanted to say that, so yes, if you're running a business, and you have inventory, you can recognize that long before you get your business license, so if you're selling that and you're going to have to pay taxes on that, make sure that you're recognizing that inventory so you can deduct that from the revenue, and you won't have to pay taxes on it. Okay, and if this is true, how do we recognize previous expenses? I don't. I think what you're saying there is that maybe you've reported income that you've had and that you didn't previously, deduct that inventory that you purchased. There is a way to do that. You basically would have to refile your taxes, but you file an amendment. And then when you file that amendment, you can go back and claim and say, hey, I had all these expenses that I didn't claim because I didn't believe, you could give an example there, or give an explanation, and you could file those. So it is definitely possible. You do have to make the decision, is it worth the hassle? I will say that I've only filed one amendment, and it was I had a tax guy at the time, and he filed it, and he didn't take off these deductions that I had, right? And it was worth, and I hadn't communicated with him properly and everything. So ultimately my fault. But I think to file he did it for $80, right? But I was going to get more money back. So that's also something you have to think about, right? How much money are you going to get back when you file? Is it worthwhile, especially if you have to go hire somebody because you're not preparing the taxes yourself? But it is definitely possible. If you have thousands of dollars of money that should be owed to you because you did not deduct it, because you didn't believe you could deduct those expenses and those are legitimate deductions, I would definitely file an amended return and get that money back to you. I think it's very important. Okay. All right. Now we're off tax. We're back into building our budget. Okay. So just a little bit more, but I think you kind of get the gist of how this is working, right? We're plugging in different expenditures based on when we believe those expenditures are going to happen, right? And so with telephone, right? Your telephone bill is very similar every single month. So that allows us to plug that telephone bill in every single month, right? I should have started over here is where I should have started. But that allows us to plug. And actually, if I go up here, give me 1 second here. I want to freeze this this one as well because now so we can see. I want to up to row 1. Okay, now when we go down, now that makes it a little easier to see what month we're working in. So the telephone and doing the telephone, if you have a job, throwing that into income, that allows you to do that monthly calculation. It makes it, easy. In a family, going back, if you have some information, if you don't have any information for like food, um, you know, it does make it hard to do the budget initially. One of the things that I've seen, you guys may have heard me talk about last week, and while I was doing the Credit 101, if you guys came to that class, we had, I talked about a class we teach called Building Native Communities, a program of OWISTA. And in there, one of the things they do in helping you build your budget, especially they figure most people don't have this information. So one of the things that you can do is a weekly diary of your expenditures. So you just take what you're spending for the day and you just write it down on a sheet of paper, right? And then after that, you can spread those out to what are those different expenditures, right? So I went out to eat, and so you add up all your food costs, you add up all your gasoline, and then now you have that for a week, right? If you think this week is typical, makes it real easy. Just multiply everything in those different, in your different columns that you came up with, multiply it by 52, right? And now you have a good approximation of what the expenditures are, right? We're going to talk about in just a sec about coming back and reviewing your budget, but there are ways that you can get that information. So I at least wanted to mention that doing a spending diary is a great way to do that. You can do that in a business, but it's a really good thing to do if you're doing a personal finance family business. I'm just going to say that I had to hire an attorney here. I'm throwing this in only because I want to give an example of what's going on down at the bottom. So I just threw that in. That's why I threw that $500 in, and I'm going to roll down here to the end. Oh no, you know what? That attorney costs more than I thought. I'm going to put $2,000. Okay, so now I wanted to say down here we're doing a cash flow projection budget, and I'm negative 1250. Okay, well there's a problem here because we can't be negative cash. Okay, so I wanted to ask you guys, what do you think are some of the things that I can do to make sure that I don't go negative, right? And I don't have all the things that I would normally do into this budget. So, it's going to be a little harder. But what do you think are some things that you might do to prevent yourself from going negative? Just throw them into the chat box. Or if you want to come off mute, that's fine. But what are some different things that you can do to prevent from going negative? Anybody? Of course, and I hope everybody's still here. That's I'm gambling on that. I see 22 attendees there, so I hope folks are still around. Okay, I see somebody typing. So, let's see what we got here. What are some different things that you can do to prevent from going negative? Okay, checking the expenditures. Okay, Natalie, great. Okay, so one of the things I might want to do. So, in this situation, I spent $2,000 on an attorney, right? So, if I didn't need to have the attorney right now, not spending the money, right? That's a real simple thing. Okay, so checking your expenditures. Okay, that's definitely one thing. Anything else? Okay, I could sell more. Great, Maria. Thank you. All right. So up here, now I had this attorney, right? I hired this attorney uh, fairly early in the business. What if I had pushed that attorney out? That's not what Maria has suggested. She suggested sell more, but I was using it to say that, okay, here I'm actually ramping up my sales, right? So I'm so maybe that's the natural way to sell. But let's say, hey, no, I really need to have this attorney. Okay, what I could do is I could maybe do a sale. I could maybe go to more events. Any way I can find to bring in more money. And this is definitely applicable as well if you are, in your own personal business, right? All of a sudden the engine blows on your car. Okay. All right. I need to go take a job at night to generate some more money that's going to help me pay that off. Okay. So Jennifer suggests reallocating. Okay, exactly. So if I can find some other money, so that's why I was saying it's difficult here. And when I'm doing this in person, and we've practiced and we've built out our budget, we have a much more robust budget that would allow us to reallocate from. Okay, and so that gives you say, okay, hey, you know what? I need to spend this 2,000. What I'm going to do is I'm going to try to not spend money in this line item. I'm going to try to save money there, right? Some of the things we've done in the past is I've had an employee and I've said, okay, you know what? I just can't bring on the employee. So we bring on the employee, and now we've been able to reallocate the money. Now I haven't heard what I thought would be the easiest way and what a lot of people in America jump to. I don't know if you guys are on the same wavelength that I am. And I'm just going to tell you. I'm going to tell you so I don't keep you guys all in suspense. But you can go get a loan. Go get a loan to get to cover that. Right. That's what a lot of people would do. They'll buy it on credit. Right. That buying something on credit is a loan. Right. And so you don't have to go and do a loan application. Just getting and using credit is technically buying it on a loan. Um, that's how a lot of people buy things, right? And that's how it gets you in trouble. But just remember now, if you have bought that, if you bought that on a credit card, if you bought that on a loan, now what we got to do in our budget is we got to build those loan payments in, right? Because we're going to have to pay that back. And so we're going to want to build those loan payments and interest back into our budget. Other things we can do, just creative ways, we can ask this gentleman, the lawyer, can you give me credit? Right? Can I pay? Can I split the payment where I'm paying 1,000 this month and 1,000 next month? There's a number of different ways that you can change things up a little bit. So be thinking about that when you're creating your budget, right? And when you have to have these expenses, you're trying to get creative, not just in how you're plugging them in to your budget, but when you see your budget going and you're having difficulty in the budget, right? Not creating the budget, but you're having a situation where you find yourself that you're running out of money. Um, be creative in the ways that you can solve those, right? It's not just, okay, just don't stop spending. Maybe that's not possible, right? Maybe you're already cutting to the bone, right? So how are some different ways that I can do that, right? Also, when we start thinking about, hey, I have an older vehicle, right? In the personal situation, am I creating room in my budget where I can save some money, right? Because a lot of times I hear I don't have money, I don't have any room to save for retirement. Okay, that's fine. But even before retirement, your car may blow up. So am I creating a little bit of room in my budget so that I can save? And maybe it's only $50 a month, right? But I'm putting a little bit of money away, right? Because I may not have credit that when the engine blows up that I can just pull out the credit card, right? Or maybe I've used the credit too much, and so I can't, there's no more room on the credit card. So finding ways to, to reduce debt, plugging those things in your budget are very important as well. Okay. So that's essentially what we would be doing with the budget. Just everything that we're talking about. And I apologize. I'm using two computers here, and so I'm seeing that I'm leaving these ghosting arrows all over the page, but they shouldn't be there. But so we're that's basically what we're doing with our building our budget. We're putting in our revenue, and initially we just had revenue the same across. Then I went back and I thought about it a little bit, how I thought that some months would be higher. I kind of said, okay, I'm doing certain things, like I'm going to an event one month, so that's going to bring me in more revenue. I'm going to have to ramp up, so it's going to be lower up front. All we're doing is doing that reality checking, right? And now we're going and we're finding the expenses that are the same every month, that we know, like our telephone, and we're plugging those in, right? We plugged our telephone in across the whole way, right? And we don't have to have 5422 there. Putting 54 or 55 is good enough, right? Just having a number that's real close is going to be good enough, right? We threw off some one-off expenses. This office expense should actually be over here, not in this column. And then we talked about some of the different things where we're going to have those one-time expenses or those big expenses, how we might mitigate those things, especially if it's going to take us negative. Okay, so that's all we're going to do. And if we had more time, we would just keep putting in more categories and we would fill this in. And then at the end, right, you come over here and you get into this total column, and here's our annual budget, right? And that's and now we have our annual budget, our how much we're going to bring in, and how much how much we're going to spend, right? And hopefully at the end we have a positive number here. At worst we have a zero. We're not going negative, right? Because if we go negative, obviously if we're looking at cash, we can't go negative. But if we have negative when we plan to do credit, maybe that's not the best situation for us in doing budgeting, and we want to change that up a little bit. Okay. So just real quick, back to the presentation. Only one slide left. So what are we doing after we complete our budget? We got our budget all filled out. It's got all that great information. What we reevaluate, how often? That's really up to you. If this is the first time you're doing a budget, maybe doing it more frequently, maybe doing it monthly, or checking it monthly would be worthwhile, because you don't have a lot of that information, and every month you're getting more data, right? But at least go in there quarterly, semi-annually, so you can adjust and say, hey, is there anything else that's coming up? I need to check on that, just to make sure, and make sure that I'm still on track. I'm meeting the goals, my financial goals that I want to meet. And if actual numbers are deviating, change the budget up with new information, right? That's the whole point, right? And that's the nice thing about building it on a spreadsheet. To change those numbers are very easy to kind of punch it in. And also, one of the nice things about doing it on a spreadsheet, it allows you to kind of experiment. You're like, well, what if I was to be able to bring in twice as much money in a month? What does that do for my budget? And it allows you to dream a little bit and say, okay, and now and when you say, okay, you know what, that's something I want to go for. That's a goal I want to have. Now, when we teach our goal setting classes, now what it allows you to do by having that goal, it allows you to now build in the tasks and the tactics that you're going to have to take in order to meet that goal, right? But you at least got to get that goal first. Okay. And then, I mentioned it before, but I just put in a plug for the importance of accounting in your business, right? So with that, I've given a lot. Wish I had more time, because it would be great to go through and have you guys all complete this. But I know that's not really possible today. But I at least want to plug in again in case you guys came in late. that you guys have on the left-hand side down in files, the blank sheet, both in PDF form if you want to print it out and hand fill it in. You have it on Excel if you have Excel. In the chat box, I just put in the Google Sheets version. So what you do for the Google Sheets, because when you click on it, it'll just say that it is it's view only. So what you're going to want to do is when you're logged into your Gmail account, you're just going to want to make a copy, and now it'll be in your account, and now you can experiment. And there was a couple other things here. I just ran out of time. One is a financial projections tool. Just gives some more tips on how you can generate those projections. And another thing, the participant guide for financial management is a resource that is created by the SBA. I mentioned variable cost, fixed cost. I mentioned profit and loss statement. I mentioned a balance sheet. Those terms may be new to you. They may be like not what you came to this webinar for. Maybe you thought you were going to make a personal financial budget, and you're like, he's talking about balance sheets. That guide has all that information in there. It's a really good overview of a lot of the financial things that go on inside your business. And it's a good thing to kind of just check out. It has information on the balance sheet, profit and loss, but then also goes in how you make these projections. That's why I initially brought it to the course, because it had had their own way of building projections. And so I just thought it would be a good resource, but it has a lot of other good information in there as well. Maria mentioned, can I spread out inventory over months if I haven't sold much? Okay, so one of the things that you should be looking for, and looking back, and let me go back and open up the spreadsheet here. So really what you're going to want to be doing is when you plug a number into this is when you spend the money. Okay, so if you went and spent, I'm just going to make up a number here. You spent $6,000 on inventory in month one. That should be where the expense goes in your budget, even if you don't sell a lot or you're selling a whole bunch in December, right? If we were doing a different type of accounting, that's when we would only what we call expense the inventory as we make the sale. But for this purpose, for our cash flow projection, when that cash leaves us, that's when we want to plug it into our budget. And then if we pay on a credit card, if you pay on a credit card, you don't immediately plug it in. However, if you're planning to pay that credit card off all next month, you would plug it in next month, right? It's whenever it's leaving, right? Because if you buy it on credit, no cash has left the business, right? It's when that cash is leaving the business or your family, right? And also, one of the things I would mention as well, yes, you can spread it out if that helps you process it a little better. But in the end, for the annual budget, it shouldn't matter, right? Because if you're going to be spending the money this year, you can see here, if we're just looking at this last column, we're seeing that $8,100 in inventory has been spent this year, right? And if we're just looking at our annual budget, we're using this monthly cash flow projection to get us to our annual budget. But it should be somewhere in the annual budget so that it's registered there, even if whether you're spreading it out, whether you're making it the one expense. The important part is that it's here during our annual budget, so we can look to make sure annually, are we doing the right thing? Are we in the right place? We look at the annual, and I should just say, because you're like, hey, well, we did all this monthly stuff. You can do this monthly stuff and do it, but a lot of people won't go month to month, or maybe they do this one time, but they won't go ongoing. And what happens is there's a lot of expenses that don't come up, monthly. So we can't look at just 1 month because we may have a bunch of huge expenses. So at least looking annually, there's usually, if you're going to have a big annual expense, hopefully you've captured it here in your annual budget. And then that will give you the best tool to see if you're on the right track, right? Hopefully that in the budget, you're positive, and then you're making a plan. What are you going to do with those positive things? Whether that's savings, putting it for retirement, putting it for, saving for the business, or, whatever it is. So, and if you guys have any other questions, that's generally my presentation. And, I'd be more than happy to stay on, show you guys more about how, we can plug in more numbers. You guys have my information. I'll just bring it back. There's my email again. I'll put it back down in the chat box as well. So if there's other questions, if you download it and it's like, I just don't see how it's working, or hey, I need to find out how I get numbers for my business, send me an email. I'm more than happy to help. I really mean that. More than happy. Everything we do is totally free of charge. So, there's no cost. Don't think, I'm going to send you a bill or anything or expect you to buy anything. It's totally free of charge. So feel free to reach out if you have any questions on how it operates or how it works. So if there's no other questions, I'm going to leave it there and release you guys, but I'll stick around for a few minutes and answer any questions you guys have. And I should say, most of all, thank you guys for coming. It's much appreciated, and thank you for sticking around. I know I can be long-winded. You had to deal a little bit with my voice and nose being stuffed up, so I apologize about that. But thank you for sticking around, and I hope you guys got some good information out of this that you can use in your business or in your family in building your budget. Thank you, guys.
Thank you very, very much, Mark. We greatly appreciate it. You did an amazing job, and I just want to thank you, everybody, for sticking on. Greatly appreciated. I hope everybody has a wonderful day.